So I've seen a few headlines and people talking about this chart that Bloomberg have put out that the short ProShares S&P ETF is had its highest inflows for the last sort of 15 years, and I thought let's do a little bit of a dive into it and see sort of how accurate or useful this is. They're saying this is the largest inflows into this short ETF since the Great Financial Crisis. But if you look, the actual sort of inflows into this was in 2009, not sort of 2007 or 2008, sort of where the bulk of the crash was. So let's have a look at the chart, sort of back during this crash. I've taken the S&P 500 from the very top in 2007, sort of late 2007 time, and then you had sort of a fair old drop while sort of, as you can see, this is 2007 and 8, nobody really was going short, and you get to 2009 where these big sort of inflows started, and best case scenario, you could say they got in maybe the first week of January 2009. So you were already 40% down from the top, and they might have caught this move, but we'll sort of see later on when you look a little bit more into breakdowns. I would wager that they're probably sort of shorting after this move as well, and sort of potentially, shorting the bottom, if not shorting after the bottom has already passed. And then you're on to a sort of fairly large bull market, obviously, the rest of sort of the 2010s, basically. So if you were short around this time expecting more, then it didn't quite work out that well. And you can see sort of outflows of this ETF really only started 2012, and even then it wasn't sort of quite that much. 2012 was basically sort of just an up year, and it just carried on from there. So yeah, people were sort of short all of this time while it was going up, and sort of again maybe a small little drop there, but yeah, can't imagine they were catching that. So basically they were shorting around here rather than sort of up in the highs of 2007. So that didn't work out too well. So another one of the big shorting periods was obviously 2020, the March crash, and you actually can go into a little bit more detail on this short ETF and sort of get the weekly inflows. So you can actually see sort of really what people did, and it looks like they were in sort of the first week, so they didn't really start until March, and sort of it was quite small in sort of the week of March the 2nd, and they really started going sort of March the 9th, 16th, and 23rd. And as you can see, so week the 9th of March, it was already sort of a fair bit down from the top, and then sort of the 16th and the 23rd was basically into the lows when people were sort of starting to really go into the short ETF. And the biggest week was week commencing the 30th of March, which, as you can see, was after the bottom. And sort of, again, they may have caught that tiny little dip, but I'm guessing not. So they were sort of piling into that short ETF after the bottom and expecting worse, I guess. And obviously then you had the very long sort of year and a half bull market that we had after that. So that's not particularly good performance at all. And then they were sort of finally getting out of it in sort of May, June time when things were sort of well up. So there's some losses presumably on there. Some of this could be sort of hedging. So people, sort of funds may have larger positions on and they're just hedging. So it's not necessarily making a loss, but I would expect there's some retail and some sort of real lost money here. You can also look at the more risk takers. So this is the 2x short S&P 500. And if you look back to sort of March 2020 time, the big crash, there were actually, it looks like there were some people who sort of did time reasonably well. They were sort of doing a little bit of shorting leading up to it, and then when sort of the crash really started, there were some people sort of profit taking. So March the 9th and March the 16th, but then you can see sort of, again, whether this is hedging, I don't know, but March the 23rd and March the 30th and April the 6th, people piling into a 2x short. So sort of going 2x leverage short round about here into what was kind of a blow off bull market. And yeah, that's not gone too well at all. So that's the 2x ETF. And then for the real risk takers, you can have the 3x S&P ETF. So again, similar to the 2x really, there were some sort of decent profit takers around sort of the early parts of the crash, but then you had huge inflows, again, sort of from the 24th of March to April the 9th, which 24th of March was in fact after the bottom. Pretty much, it was the day after the bottom. People piling into 3x short. So you would have got absolutely destroyed if you'd sort of held this for any real period of time. And yeah, obviously, I presume they would have covered that or sort of got out of that not long afterwards. This does sort of, if you go past there, show some sort of really heavy inflows. Not sure if this was just an anomaly really, but yeah, you can see sort of the 3x even worse potentially. And so that brings us to this year, where the record inflows have come. So let's take a look at the 1x sort of standard short ETF for the last sort of year. And yeah, people were sort of doing some shorting sort of throughout this bear market. Sort of wasn't even quite a bear market in some of these points, and sort of a little bit of profit taking. It's not particularly huge volume until you get up to sort of August time, really. So August the 15th, 22nd, and 29th. So just sort of seeing what they're up to. August sort of 15th. Actually, not too bad. Sort of people going in there, and sort of up to the 29th was still sort of a reasonable fall, depending on sort of what they did afterwards. A little bit of profit taking, and then sort of going short again. September the 19th, and profit taking now. So again, they've not done too bad in the last few months. See what the 2x have done. Again, it was sort of muted amounts of shorting earlier on in the year, but sort of May the 30th was their sort of big trade, and this again seems to have been sort of a reasonable high point, and then sort of cashing out on this after this drop. So they've done quite well on that drop. And then again, not sort of not all that much volume, sort of past there a little bit in late June. So yeah, that's people sort of buying the bottom again. But we'll see how they do. And the 3x, very interesting how these are sort of quite different timings. People sort of getting into the 3x and the 2x at sort of completely different times. So there wasn't a lot in May on the 3x. That 3x was all June 27th and July the 4th, which from the looks of it wasn't very good. June the 27th sort of here, and July the 4th sort of around here. So again, would have seen a fair loss on that, unless they were sort of topping up around here as well, which it doesn't seem like they were. A little bit of sort of adding to it, and then sort of profit taking, but those sort of huge inflows, certainly on July the 4th, seem to have been a fairly poor buy. So yeah, overall, I'm not really taking this with sort of a great deal of importance. They seem to have a very spotty record of shorting. This year, they seem to have done a little bit better, but certainly in the 2020 crash, that was sort of appalling shorting there. And yeah, 2008 crash, they weren't doing anything until it was basically bottomed. And I would expect there was quite a lot of money lost in these 3 years. So yeah, make of that what you will, but I don't think this is sort of something to be putting too much importance in. But if I'm missing anything, and this is sort of hedging or sort of actually other reasons to be shorting that aren't necessarily losing money, then do let me know. But otherwise, yeah, let me know your thoughts on this. I thought this was interesting. So yeah, like and subscribe, and see you soon.